First, let me introduce myself. John Myers. I'm the board chair of Impact Capital Forum, and this is the first of several programs that we intend to do, bringing in international speakers or speakers from different places around the world onto the Impact Capital platform. And it's a great pleasure to share a little bit about the organization. That we're a membership organization focused on the impact sector writ large, including impact investing, social entrepreneurship, and related topics in different geographic regions with a focus on different geographic regions around the world. We are a network of some 3,500 persons in the sector, and very open and to new members and the interests of people in the sector. But today it's a special program for us as we seek to bring on speakers from Africa to discuss the impact of COVID-19 on impact investing. It gives me special honor to introduce Ndeti Moore, who's an Impact Capital Forum board member based out of Nairobi, and she will then, I think, introduce our speakers and introduce our panel. So Ndeti, I turn to you. Thank you.
Great. Thank you so much, John. It's truly a pleasure to connect with everyone here while in Nairobi, and truly an honor to have a panel discussion on the role of impact investing in Africa in light of COVID-19. I am delighted that we at Impact Capital Forum are seeking to expand our network through membership and partnership here in Kenya and eventually across the continent to surface insights on investing and social entrepreneurship across the continent. I am truly delighted to introduce one of our dynamic speakers who's also a fellow board member, Mr. Kwame Marfo. Kwame is the managing director, a managing partner of the Africa Empowerment Fund. He is also the chair of the investment committee for Diaspora Capital. In addition to being a social entrepreneur, he is also an impact investor with investments in agribusiness, real estate, technology, and media. So with that, I am truly pleased to have this conversation where we have speakers joining us from Ghana and Kenya. So I will hand it over to my colleague and board member, Kwame, to begin today's dynamic discussion.
Thank you for the kind words, Ndeti and John. Right, Africa is definitely an interesting region that we have been looking at expanding in. In terms of its experience with the current pandemic, something rather strange is happening. I'm not quite sure has been fully explained yet. So looking at Ghana, which has the highest number of confirmed COVID-19 cases in West Africa, and also a region that I'm fairly familiar with. Upon last check, I believe there had been something north of 20 fatalities. Now, while this is it's a horrible turn of events, it hasn't been anywhere close to some of the apocalyptic scenarios that were initially projected, and knock on wood, things don't change. To put this into perspective, and I know we should not really be comparing experiences across different countries, but for the sake of argument, I did look at the UK, which has double Ghana's population, and upon last check, there had been 30,000 confirmed cases. We will leave the health situation to experts to explain what is happening. However, one area where we feel we can predict with a reasonable degree of accuracy is the impact on economies, where Africa faces simultaneous shocks to demand, reduction in export earnings, and also capital flight. We are privileged today to have economic agents who are on the front line fighting the pandemic to keep Africa's dynamic economies from faltering. Our speakers today would represent, will consist of speakers from the investment community and intermediaries. And historically, most of our activities have often focused on investors, not so much on entrepreneurs. We are also privileged to have an entrepreneur in our midst today to give us a much more rounded perspective. For our agenda today, we will cover a number of topics, which will range from the current state of affairs, its impact, and response measures. For the first half hour, I would ask questions to the panelists, and open it up to the audience for the second half hour. There's a Q&A chat box on the bottom of your screen. If you have any questions, feel free to post them, type them in, and I'll be happy to ask them of our speakers. Representing the investment community is our speaker, Amanda Cotterman. Amanda is a managing partner at EquaLife Capital, which is Africa's first venture debt fund. And she's also a partner at EquaLife Advisory Services, which provides hands-on strategic and financial management support to startups and SMEs throughout the region. Amanda's focus is on building and investing in businesses catering to emerging middle-class consumers in East Africa. Representing the market intermediary community is Esther Ndeti. Esther is the Executive Director of East Africa Private Equity and Venture Capital Association, a firm that raises awareness and engages on regional policy matters on behalf of investors, as well as mobilizing capital flows in East Africa. Esther has a proven track record of success in the region's investment and SME sectors, with a focus on program management, fundraising, and business development. Our third speaker representing the SME community is George Boakye Sarpong. George is the founder and CEO of Green Gold Farms. Green Gold's vision is to become Ghana's largest vertically integrated and value-add agribusiness. George believes that Africa can feed itself and its people can be empowered to live themselves out of poverty. And for full disclosure, Green Gold Farm is one of my portfolio companies. And I'm going to turn it over to the speakers. The first to go, Amanda. What is happening? What is the experience of the current pandemic in the East Africa region?
Sure, and thanks again, Kwame, for inviting us to join on this panel today. As you shared earlier with some of the numbers, it's a bit odd, the spread here, and how low it's been, but being on the ground and being out in the market, we're definitely seeing the firsthand effects. Clearly our borders are closed, there's no flights in or out, and that's affecting exports. Definitely seeing numbers out there of a decrease of 60% in exports over the last 2 months. That has a huge detrimental impact for the economy. We're also seeing a lot of informal businesses begin to struggle, if not close down, as many people here do live hand to mouth. And it's affecting not only their mobility across the country, but their ability to keep customers. That being said, you know, it's also a very dynamic market. We're on the forefront of kind of the venture ecosystem here with tech businesses that are helping not only kind of mass markets, but this growing middle class. So it's quite ironic as an American looking back to the US and talking to family and friends, some of the struggles on delivery and supply chain. Well, we've definitely had a breakdown here in supply chain. We can order very quickly our food in kind of the middle class community, and you see the tech businesses really stepping up to figure out new ways to innovate and get products out to consumers. So definitely some hardships that are going to take some time to get over, and companies were looking for solutions and ways to be able to help bring this economy back to where it was pre-crisis, but a lot of innovation that's coming out of this as well.
Great insight, Amanda. Esther, Amanda did talk about some of the innovations coming in from the various players in the market. It would be helpful to hear from you, particularly with your experience with the investment community. What are you hearing? What are some of the opportunities and challenges that the current pandemic presents?
Thank you. I think with regards to assessing opportunities and challenges, I think it's really two sides of the same coin. What it presents as a challenge has also presented as an opportunity for some. So whereas some of the sectors, healthcare, education, food security have traditionally been seen as sort of like impact sectors and have been left to impact investors, now they've been brought under the spotlight. And you know, the businesses in these sectors now are seeing more interest from investors across the board. which is a really key thing right now. So all the innovations that we've been seeing over the past few years around health tech and sort of like logistical supplies of sort of like sorting out the infrastructure challenges that we're seeing on the continent with regards to last mile distribution. So we're seeing a lot of that now coming into the forelight and being of interest to investors, to the broad array of investors. The education sector, with all schools closed at the moment, it's been really interesting seeing what are the solutions to addressing this, and how do we still get students and the youth of Africa still learning and the curriculum still going on. So we're seeing a lot of interesting innovations now coming to the forefront. And then also when you look at the policies, we're having a rapid change of policies happening across board. So if you look at a country like Uganda, where overnight we saw that all borders, which are essentially bikes that are used for transportation, have to be registered under a mobile, a tech platform, basically. So essentially, what was a small, the company called Safe Border, which is a small, bike transport company, suddenly it has the potential of being the biggest transport company in Uganda, for instance. And this was initially invested by a few impact investors, but then now that deal is a really significant one. So we're seeing sectors that were traditionally left for impact investors only really coming to the forefront and seeing opportunities really building up. I think there'll be more with regards to the manufacturing sector as well, both in small and large scale. So I'm keen to see what happens in that sector, and more with regards to the agricultural sector, because food security is a big topic at the moment.
Very great insight, Esther. George, Esther did talk about food security, and I know that is a topic that is near and dear to your heart. We have had quite a few conversations, and access to capital has been perhaps the biggest challenge that you face as an entrepreneur. Can you share with us some of your challenges in accessing capital, and how has that changed with the current pandemic? George? I think he's on mute. Your phone is on mute, George. Your phone is on mute.
Sorry. Yeah, so when it comes to the capital market in Ghana, it's all been a place of no fair play. Why do I say that? The government actually borrows on the market at 25%. So the commercial banks are comfortable loaning money to government. So if they want to loan to private businesses like myself, it is always at a higher rate, whereby they add their spread and you are going to the 30s. This is a disincentive because the bank sees you as a risk and therefore will not lend to you. Now we are in a place whereby we see food prices going up with this pandemic, and there is nothing to support the system. The people on the ground do not have any support, because you see people are more against risk agriculture. They see agricultural business as a risk, and therefore they do not want to invest in it. Post-COVID, it has become even more dire. The government is trying to, play some key roles, provide some stimulus, but we don't know what is actually happening. They only say the right things, but you are not seeing the actual measures on the ground. Therefore, access to capital, as you rightly said, is a big issue for SMEs and for food security, in that we are always importing what we eat, and now that the global supply chain systems are being disrupted, you are seeing food, the vulnerable people in the system being exposed to food insecurity. And if this should go on for a little while, it's going to blow out of proportion, and it's going to have a catastrophic effect, just like the COVID itself.
Thank you, George. I'd like to follow up with you, Esther. George highlighted the crowding effects of the public sector, which has led to some market failures in terms of how capital is priced in the market. I would imagine that market builders like yourself are actively playing a critical role in terms of mobilizing capital to support businesses like George. What various initiatives are taking place in the market, and do you see this as being enough to deal with the current pandemic?
All right. I always forget to unmute myself, but here we go. So as EAVCA and other market builders really are, one of the core functions of the networks and the associations really is to, one, mobilize local capital and ensure a significant amount of this capital is flowing towards businesses there locally, and two, to attract more capital from the global share that's raised every year to sort of like drive some of this capital into this region. So as EAVCA, for over the past number of years, we've worked closely with different pools of capital, particularly the pension funds, where we're seeing significant amounts of capital that can be deployed towards funds that are investing in businesses here in East Africa. This has been a work in progress where we're educating pension funds with regards to the benefits of investing into SMEs, into funds that are investing in SMEs, and just exposing them to assets outside of the traditional asset classes. Now, this has been a work in progress, and what we're hoping to see is that they will still bite into this apple despite the COVID-19 pandemic. Some of their worries before have been that there hasn't been enough track record of private capital on the continent so that warrants them to sort of like deploy capital into impact investors or private equity or venture capital yet. So hopefully this doesn't deter the local capital. But what we're seeing that is good and growing is that there's more philanthropic effort. So we have more African leaders sort of like diverting capital into crowdfunding platforms and into pools of capital that are going into MSMEs. So just widening up that alternative source of capital for funds that are investing here in Africa. But if you know sort of like the history of funds that are investing in Africa, the primary LP or fund of funds is DFIs, and they have continued to be solid with regards to deploying capital into this market and being able to sort of like adjust their expectations for funds who are investing in East Africa based on the current situation.
Wonderful. Amanda, one thing that Esther mentioned is creating new asset classes, and I know you are at the forefront of creating Africa's first venture debt fund. Can you share with us just a sense of the investment thesis? How is it different from traditional credit provision on one hand and private equity on the other hand? And also, what will be critical to understand is how do you price credit risk in this current climate?
Yeah, no, great question, Kwame. Well, if you look at traditional venture debt, it's the debt that comes alongside equity and venture-backed businesses. And the role it plays is really minimizing the dilution for both the entrepreneur as well as the existing equity investor to provide additional cash runway for the business to prove out a specific aspect of their growth, so that it helps them on their next round of capital and improve valuation. What we have seen in this market is that there are many different debt players who have come in from your traditional, clearly your banks, then at mezzanine level and private equity, and then impact debt. But really that venture debt asset class is something new here because it grows hand in hand with the venture ecosystem. Remember, on the continent, we're only about 5 years in at best of a venture capital community of both entrepreneurs and investors. And with the debt in any ecosystem around the world, it's only about 10 to 15% of that capital coming in. So it usually has a lag effect as an ecosystem's built out. but it's really important to be able to think about different instruments to use to give these tools to entrepreneurs in their capital structure. So right now we're at the point of trying to play around with it. It's not going to look the same in East Africa to the rest of Africa to Silicon Valley to even other emerging markets like India, and trying to figure out what works here within the parameters of that asset class. Now, you asked about kind of credit risk and how do we price for that. It's a little bit different right now in COVID, and that's what we're in the process of actually raising a COVID-19 venture debt recovery fund. Because when the crisis hit, we were just inundated with requests for debt. And you're right, at first glance, there was a bit of a panic on pricing and the risk out there. But on, thinking about it further, realizing that this is a great asset to continue to adapt in a crisis, because ultimately the underlying use of it is the same. It's just not for a growth story now, it's for sustainability. And thinking through how we price that goes hand in hand with the type of capital we raise. Ultimately, it will have to be looking more for impact returns than financial returns. And so we'll really be honing in on how many jobs are saved, as well as making sure we can back the businesses that will have the most impact post-crisis if they're able to weather the storm. But in general, about thinking about credit risk, it's really about, can someone service that debt and can they repay it? So thinking about what stage of their operations they're in, making sure they have not only a size of revenue, but also kind of the team and operations in place to be moving from testing out their business model to now being in growth stage, and also making sure that they're on a path to positive cash flows if they haven't hit it already, so they can be towards that independence outside of their equity investor to service it. But we do look at how they fit into the larger, I guess, venture ecosystem as businesses, and you can't back everybody. So it's really about finding those winners as businesses, as well as the equity investors that are going to be able to take them to that next level.
Thanks for your insight, Amanda. Now switching topics, George, we'd like to discuss the role of the public sector. And I think that is one area that hasn't been looked at favorably. You did mention the crowding out effect of the government and having all these stimulus measures that are not quite fit for purpose. I'm looking at some of the second order effects. World Food Program currently is, and we did also talk about food security, is currently projecting second order effects of the crises that would include farming. And based on their projections, up to 130 million people could be pushed to the brink of starvation. How prepared are governments to this potentially impending crisis, and what solutions are organizations like Green Gold offering to help address this particular issue?
Well, thank you, Kwame. As you are aware, the government of Ghana, I will have to commend for actually taking up the challenge to make sure there is food security in Ghana. He has created a national food buffer stock, and then introduced programs like Planting for Food and Jobs, and then Rearing for Food and Jobs, that's a livestock production. And these are, although on the peasant and lower scale level, they are nationwide programs that encompass a lot of people. So we are trying to ensure that there is food on the market. Also, the government is giving a stimulus package of about $100 million. And although the modalities for sharing this stimulus package is yet to be announced, he has made it aware that it's going to impact a lot of businesses in a small scale sector so that they can actually increase their food production. But with the problem with government is that although they have good intentions, the execution of these intentions always leave much to be desired. And so Green Gold has developed a strategy. Although we don't have the money we need, in that we adopted a capitalized strategy to make sure that we secure our lands. And so at the moment we have secured 3,000 acres. And when we move to site, within a month, we have cultivated a large tract of land, constructed a dam, and planted maize by mechanization. So what we are saying is that we have the ability to execute a project just like any other project that international projects that exist. We have the team, we have the know-how, and then we are willing. Myself, I have just came to Accra because I had a board meeting today, although it's online. Kempinski, you have to look the part. But when I go to the field, I put myself in there and we do work, we supervise everything because this is our means, this is our baby, and we are all passionate about it. Green Gold Farm is working with GIZ and other multinationals like Nestle, making sure that we have their requirements and their protocols, and we follow it to the letter to make sure that it is quality product that comes out at the end of the day, and there are no surprises. So by the time we are done with production, we are sure of the market, and they are up there with us picking up our produce. So this is what Green Gold intends to do differently, and when we scale this up, it becomes a food basket for Africa.
Thanks for your insight, George. It seems it always comes down to access to capital. And Esther, I'd like you to opine on this. So to the issue of access to capital, female entrepreneurship is actually an area where Africa is a world beater. I was looking at a report by Global Entrepreneurship Monitor, and it looked at 12 countries with the highest enrollment of female entrepreneurs. And of these 12 countries, 7 of them are in Africa. Yet in normal times, female entrepreneurs struggle to raise money. I imagine market builders like yourself have a critical role to play in terms of improving access to groups that traditionally are shunned by mainstream financial intermediaries. Can you share with me some of your experiences in this space? Are these enough? Where are the gaps? And what can be done to address these gaps?
Thanks for that question. So funding towards female-led businesses already has huge question marks around it. The inequity, sort of like the businesses, that are funded by, funded to male-led businesses versus female-led businesses. You've seen all the reports. And in Africa, it's just that so much so because of the traditional structures that have been inbuilt into the systems. With regards to inheritance and all these other backstories that have prevented women from accessing capital in the past. Just prior to COVID-19, there had been quite a number of initiatives that had been launched on the continent, I think globally really, with regards to increasing the amount of funding that goes to female-led businesses, where funds had been sort of like tasked to really adopt a gender lens in their investing, and where LPs and DFIs were put to task with regards to ensuring that a percentage of their funds goes to either gender lens investment vehicles or sort of like working with their GPs with regards to directing capital to female-led businesses. One of the concerns that we've seen coming up recently is that even as you look at the stimulus packages that have been mentioned that are being developed by governments across Africa, you're seeing that some of the previous notions and the old structures are creeping back. So there's a huge possibility of funds going to more established businesses and sort of like missing out on female-led businesses yet again. Meaning that down the road we'll see even a bigger gap with regards to equity in these businesses. So we're concerned about that, and we are amongst other market builders working together to sort of like inform the planning of these packages to make sure that they address these gaps right from the very beginning to avoid any future sort of like widening of the gap. And then another thing we're seeing is that there are certain gender lens funds that I think were a work in progress, and now they're coming to fruition. I saw news recently around the Kiva Invest in Women Fund, which was previously a crowdfunding platform, which has evolved into this gender lens fund, with the backing from USAID, I think, a few donors. And the fact that this has, launched is a really, really encouraging thing for the continent. We saw also, I think, correct me if I'm wrong, Amanda, but I think Alifea is the first gender lens fund that has closed on the continent. They closed the fundraising recently, and that was really, really encouraging. So such, initiatives coming to fruition is really encouraging for us, and just making sure that we're advising and giving thought leadership to initiatives that are being run by government or by any sort of like towards addressing businesses on the continent today.
Wonderful. I do notice a number of questions have come in. So I'm going to ask one last question and turn it over to the audience. So Amanda, a related topic with transaction costs, particularly for smaller businesses that are on the smaller end of the size spectrum, which typically would have a higher proportion of female businesses. The cost of hand-holding firms, the cost of due diligence can sometimes be quite astronomical and eat into investment returns and make investing in SMEs, female entrepreneurs, unviable. So how, can you share with me some best practices in the market on how you manage to deal with transaction costs in terms of SME investing?
That's a tough one. But hopefully we've done it, because 60% of our portfolio to date is in female-founded businesses. So there is hope that it can be done, especially for those who have a gender lens or gender equality focus. But this is the chicken and egg, and the biggest challenge right now with funds being launched specifically out of Africa. Just do the math. It's very hard to get all your numbers to add up on your costs and make sure as a fund manager you're not paying out of pocket to be able to run your fund. For us specifically, I don't know, you can decide if it's a sunk cost or an investment, but really leveraging my 8 years on the ground here in Kenya and working in the region, not only as an entrepreneur, but as a consultant and advisor and now investor. So there's a lot of time, relationships, knowledge that goes into diligence that has been built up over those years. And so we can't really cost that in, but it allows us to have a very streamlined diligence process and be very thorough at the same time at how we look at this. But we're also trying to keep it as simple as possible and not make entrepreneurs jump through many hoops, as well as us as a fund manager do unnecessary work. And we're trying to build out kind of this debt legal toolbox so that we can be able to pull on different documents and resources and know-how for each deal, and we aren't accumulating additional costs as things come up. But it is an ongoing challenge, and we're always trying to find innovative ways to make this financially viable as we grow to being a larger fund.
Wonderful. So I'm going to turn it over to the audience, and I have noticed a number of questions in the chat box. Can you please put them in the Q&A box to make it easy for us to track them? So the first question is from Dr. Gillian Marcel, and that goes to Amanda. The question is, you did talk about impact returns vis-a-vis financial returns. This implies that impact will not have risk-adjusted financial return plus positive social impact. Can you comment on this?
Yeah, I think to your point, it's really hard to balance making sure that we have the financial returns that LP investors are seeking, even if they are impact focused, with making sure that we actually have tangible impact on the ground here. Now, we're specifically, I think, what I was talking about was our COVID-19 fund that we're in the process of raising. So the financial returns will be different because ultimately the companies that we're trying to help, and at this specific period of time, we aren't necessarily pricing for the true risk. We are putting more of that impact focus on and are seeking concessional capital for those investments. But through our traditional venture debt investments and future funds, we are definitely making sure that there is a strong financial return to make this not only sustainable, but prove to the larger investing community that you can do both. And that's something we have done with the track record we've built over the last 2 years.
Wonderful. Thanks for the insightful answers, Amanda. There's a question from John Chitano. He talks about investing in women. Do you have any exposure to EAVCA initiative, and how can funds be leveraged to flow through DFIs like the African Development Bank to businesses?
Is that for me?
I guess an open question. It wasn't addressed to anyone in particular. Esther, well, Amanda,
yeah,
any of you? Right, go ahead.
I'll take a stab, then I'll let Esther go for it. You know, there's several different initiatives out there from the DFI world and foundations and more traditional investors on supporting investing in women. And, you know, we're open to collaborating with those. I, as a woman investor, as a woman fund manager and entrepreneur, you know, we seek the same financial returns from female businesses. I don't think they grow any differently. And so it's the icing on the cake if we can get additional funds to be able to have more TA and focus on those businesses. But we're also excited that we can continue to invest in female-led businesses through traditional funds available as well.
Thanks for your answers. Esther, would you like to take a stab?
No, I think Amanda has covered it.
Wonderful. The next question is on food security, and it's around, well, in East Africa, obviously had the locust crises prior to the pandemic. What are you seeing, I guess, Esther, in terms of investment flows towards enhancing food security in East Africa? And that's a question from Millie Roy.
So what are we saying towards investment towards food security given the
Right, so right, the locust pandemic, or the locust crisis, which has been, I guess, amplified by the current pandemic. What were you seeing in terms of investment going towards sustaining food security in East Africa?
Well, you know, granted that I haven't seen sort of like a huge shift with regards to the investments currently. So the strategy I'm seeing a lot of the investors in our market applying currently is to, one, protect or preserve their portfolio companies first, and then now look into the emerging opportunities. So for those businesses that are in food security that already had investment in them, I know the investors are working, you know, long hours to make sure that their businesses are operating well and that the supply chains are as least affected as possible, you know, based on everything else that's applying at the moment. So are we seeing any change towards the investments at this point? There's no significant increase at this very moment, but I think, like I mentioned earlier, it's a huge opportunity going forward.
Thanks for the answer. I guess one other question that Esther touched upon, which is from Dan Kuyo. He mentioned that he touched upon promoting supply side funding for pension funds. Other than track record, what other aspects are holding them back from investing in PE and VC?
Okay, so one was track record, certainly, but the other was also an understanding of the asset class. So if you think about it, private equity as a whole isn't that old within the continent. In East Africa, certainly, private equity is not more than 20 years old. So just not having, you know, that understanding of what to expect, there are not enough practitioners within the pension industry who are actually involved in private equity as well. So just that whole grow, and that's the role that EAVCA was playing, literally. We've been taking them through classes, just explaining what private equity is, what the J curve is, you know, everything that goes towards doing a deal. How do you source for GPs, and how do you do due diligence, and how do you do the legal contracts with these firms? So that understanding and that sort of like expertise, professional expertise in the asset class was a bit lacking, but it's growing certainly, and we'll see more participation going forward.
Thanks, Esther. There's a question here from Suzanne Solomon. Suzanne would like to discuss sources of funding for COVID-related relief projects, looking beyond financial returns? Anyone happy to take a stab?
I'll just kind of, I think, to summarize what Esther had shared earlier and what we're trying to work on is that right now, I think a lot of investors are definitely having a focus on impact to keep these economies alive and in a position to thrive post-crisis. Most LPs or traditional investors are doubling down on their existing portfolios. So it's tough to find outside capital. That's one thing we're trying to solve for, but we're in the process of raising that capital. And then there are certain foundations and grant organizations out there, but there's a lot of great resources online to be able to seek some of that more softer capital on the grant or donation side, where I think it's still a stay tuned on what comes out on the more investment focused side.
Thank you. There's a question from John Trant, and John would like to discuss the range of returns LP investors within the impact space were expecting pre-COVID, and how is that expected to change with the current pandemic? And she's trying to understand it from both the private debt and private equity side of the market. Amanda, perhaps?
Sure. I think some people have kind of given it a thought, and I think a lot haven't necessarily been faced with that yet. As kind of I just mentioned, a lot of investors, especially in the DFI community, are doubling down on existing investments. So they had already had a idea of what their expected returns were in either a GP or a direct investment. And so it's about protecting that return. Others, as the conversations we've had, and of course there's other perspectives out there, is that from more individual or private investors, the expected return doesn't actually change that much, which can be a challenge in seeking that capital. But it is something that still needs to be proven. And I think a goal that we focus on is, as we try and raise this fund, if there's ways we can do even just a deal by deal to be able to signal to the market what it really does look like to invest now and that you can get a return while having impact. But it is something that's evolving, and people are being tested on that as they actually have to deploy capital.
Right, there's a follow-up question to that, Amanda. They wanted to get a sense of what are the types of returns in terms of like internal rate of return, right, in terms of numbers, yeah.
Look, what we've been seeing, for example, in the impact debt space, expectations pre-crisis were around a 10% return. I think that just goes down 1 or 2% from what we've been hearing, with this crisis. So we always are continuing to gather information and hear different perspectives, but a lot of investors are still pricing in the risk for them to be first movers and take on this challenge in these markets. As this is a global pandemic right now and an issue, there are other ways for investors to deploy their capital, be it in donations or investments. So I think it's a tough one on the numbers still.
Wonderful. There's a question from Shadrach. He talks about witnessing innovation, which if financed to scale would improve health situation in Africa. He talks about hand-holding these firms in order to get them to scale. I guess that question was previously addressed by Amanda in terms of how do you deal with transaction costs in order to scale up businesses. A question from Dan Kuyo. Amanda, post-COVID, what do you see risk parameters changing in terms of new investments going forward? And what are the key due diligence indicators and outputs that you're looking at?
Yeah, great questions. I mean, I think we still don't know what post-COVID looks like, and things are evolving. I think one of my biggest learnings, and we've been quite fortunate with our existing portfolio that they're weathering the storm quite well, but something I'm seeing as I look to the market is as investors or entrepreneurs are seeking additional capital, this requires restructuring of existing debt and renegotiating certain valuations on the equity. And so I think it just hits home the importance of what we focus on in venture debt is really knowing who you're getting in bed with, both with the entrepreneurs and the other investors there, because when the going gets tough, we need to be collaborative, and we're not in it to compete to bring the company down, but find ways to help them succeed. So that's definitely something we've always thought about in how we assess the businesses to go into and structure our loans, but has just proven to be so important and something we'll continue to do going forward.
Wonderful. There's a question from Joan, and I'll turn it over to George. Well, she wants to get a sense of in-country experience of the COVID crisis and which sectors are being impacted. And I also like to flip this question to you. There has to be some opportunities with the current pandemic. Can you highlight some of the opportunities you do see going forward with the current crisis? George?
As you are aware, the crisis has actually brought this social distancing and then restrictions on mobility. And, you know, multinationals are quickly repatriating capital, so nobody is really investing much. And so there is a bit of tightness in the system. For example, my company that I work for, the Kempinski Group, the leading five-star hotel in the whole of West Africa, is now operating about 3%. There is no revenue. And, you know, with their debts that they have to service, these are dire times. About 85% of the staff have been asked to work from home. It's a difficult time now. In country experience, the government is asking the transportation sector to practice social distance. These taxis and, you know, how do you call it, trotro as we call them here, has to pick about 4 to 18 passengers per trip. Now they are being asked to reduce it by 50 or 70%. So there is total loss of revenue, and business as we know it has disappeared. Now that you hear there is a new normal. The new normal is more online. We have to switch on online and do a lot of activities online. So there is an opportunity for people to invest in online businesses, in education, you know, entertainment, learning and health, and then also distribution systems, because we are having an issue with, you know, imports coming in now. The Tema port is basically shut. Nothing is being taken out of there, although the goods do come in. You don't even have the people to do the necessary processing to get it off to your yard. So what we have to do is a bit more online opportunities. Again, food prices have shot up dramatically in Ghana. From March, we started witnessing a 30% increase in food prices. And this actually works to the disadvantage of the poor people. We know the cedi has a high devaluation rate and is always losing value against the dollar. And if we are importing food and, you know, prices are going up, then the poor people cannot actually get food. So there's an opportunity for us to actually turn Ghana into a baby Silicon Valley for food production, whereby we employ technology and funds and the expertise to actually produce the food the right way, with the right quality, with the right nutrition, and actually sell it in country, and then also to the regional market, because you refer to a document I shared earlier from the African Development Bank that showed that Africa is importing about $65 billion worth of food as of 2017. And this is crazy if you ask me. All these food items could be produced in country. It is about time that somebody took up the challenge. The good thing is that the governments are actually realizing this opportunity. People are now actually realizing that the life that they want in the West, what they desire in the West, cannot always be attained. And now it is up to us to look within ourselves. So you hear the government now enforcing people to actually take their business online. The government is saying that business registration is being done online. What online business will do is to remove corruption, you know, the people-to-people interaction, and remove corruption so that business will flow easily, because you don't know who's at the end of the other line, doing business, and you have no option than to deliver per your KPIs and SLAs. So there is a lot of opportunity in real estate. In retail, where I also operate, there is a need to do the Argos and Amazon kind of retailing, whereby you are not actually entering the store to get items, because my mall is empty today. I have people opening up, but customers are just not walking in. So what we have to do is push a lot more business online. And so there is an opportunity for the investors to actually scale up online business in Ghana, just like we did with mobile money, which is a very high penetration in Ghana. Almost everybody have a mobile money account. When we we streamline all these activities online, then we can actually collate the tax base of Ghana and generate more revenue for government, because we cannot always live on loans and borrowings and debt and grants and stuff like that. We need to look within ourselves to generate, and now is the time to actually start working hand in hand with government. The people themselves are realizing that no, they have to change, and we have coined a new term, the new normal. The new normal is that you have to do it yourself. You need to do it yourself. So as education is being done online now, from the university to the formative lessons are all online, it's time for business people to actually create the content and also the devices that these people can access their education on. It presents such a huge opportunity for all of us.
Thank you, George. I wanted to combine, one, Ted Miller wants to explore volunteer opportunities and investment space in East Africa. Ted, feel free to reach out to me offline. I'll be happy to connect you with the panelists. I wanted to combine questions from Esther and John. So John wants to talk about tech and how tech can be leveraged to improve agriculture in the market. And a related question from Beatrice is she'd like to get a sense of the emerging opportunities within the agri value chain across East Africa as a result of the pandemic. George, would you like to, any of you, Amanda, you'd like to have a go? Or?
I feel like George is the expert on the supply chain. I'll let him take that one. Happy to talk to tech. If George, if you have some views on that, I'll let you run first.
Supply chain, food supply. In Ghana, like I said, we depend heavily on imports. But what you see about is that the country of origin are actually cutting down on exports. So very soon we will not have the food to import. So we need to put in these measures that we are able to grow and deliver the food to where they need. And we can combine all resources, be it technology. For example, if a farmer is producing and they have the goods at their on the farm, and you have a technology whereby a platform whereby you can actually sell and people will order and pay. And then we have a company that actually goes around for distribution. So they pick up the item from one space and move it to the other. This can become a new business whereby we will employ a lot of people. It will be less contact with one-to-one, but we are using technology and then money services. And in all that, because this becomes something that you can track online, then you can actually tax these people. The government is actually doing a digital economy, and like I said, they have all the right intention, but then the execution leaves a little bit of room for improvement. And this is where the private sector will come in and help out to scale it up and make it sure that it is secured and workable solution for all. That's what I would like to say.
I did notice a couple of questions in the chat box, which unfortunately I wasn't able to get to. But I just wanted to sort of run through perhaps one from Suzanne, who
Can I
wants
just
to.
add to what George said?
Absolutely, Esther.
So just in addition to what George has mentioned, is something I'm excited about is if you look at Africa, it has had a long history of non-trade between African countries. So whereas Ghana is a net importer of food, and some other countries, it's very strange when you find out where they import their food from, yet there are certain countries within Africa that have food baskets, for instance. So something I'm really, really looking forward to is the operationalization, that word is so hard, of the Africa Continental Free Trade Agreement. The AU has made significant progress on the AFCTA roadmap, and they plan to operationalize in July. So for me, that's really exciting because then, certain things that George has mentioned can also be done on a continental level as opposed to sort of like looking within as well. Infrastructure has been a challenge for within the countries for a long time, but as after sort of like operationalizes, we'll be able to sort of like bridge those gaps that we've had for a while. So that's an opportunity to look out for.
Wonderful. Just wanted to make sure one of the our members of the audience has been asking a number of questions, and unfortunately I did not see them in the chat box. She wanted to talk about climate change and how she predicted the impacts on climate change on impact investments. Anyone want to take a stab?
Kwame, it's Mabinti. Yeah.
Mm-hmm.
I think this is thank you for sharing that question. It actually aligns with the forthcoming Impact Capital Forum webinar that we have coming up next month, predicting climate change's effect on impact investments, as well as opportunity zone and architecture of legislation. And in July, we have others related around impact investing, really focus on diversifying your portfolio during these times, as well as water and ESG integration. So the question regarding climate change is perfect for next month's discussion, as this is something that we've been following and certainly building on this theme of impact investing across the continent of Africa is something that we will continue to expand on various facets. So I thought it would be helpful to share what's coming up for Impact Capital Forum.
Thanks for the timely intervention, Mabinti. And it looks like we are at the top of the hour. On that note, I'd like to reserve a special thanks to our panelists, board members of the Impact Capital Forum, Mabinti definitely for putting this together, and also the audience without whose enthusiastic support this event would not have been successful. I hope we're able to give you a sense of the situation in Africa and also convince you that the current impact, even though it's quite dire, there are heroic entrepreneurs, impact investors, and market builders like the panelists who are working on keeping the continent's economies, dynamism from faltering. Enjoy the rest of your day and see you at the next event.
Thank you.
Bye.
Bye. Thank you, everyone.